Hello guys, trust you're doing wonderful. So welcome to today's video. So in today's video we'll be looking at something technical. As price action traders, we will learn about the reaction of price. That is, we learn about support and resistance. You know, there are other intricate aspect of support and resistance we will be looking at now, which is chart patterns. So today we'll be looking at chart patterns. So I implore you to stick around if you really want to gain value in chart patterns. How you not just wait for normal retest of price or normal breakout of price to trade, but then you want to learn how to identify key chart patterns. Like, okay, this is a head and shoulder pattern, it's a reversal pattern, right? This is an inverse head and shoulder pattern, this is a double top pattern, all those patterns. So stick around and destroy the subscribe button and then pay attention to the section now. All right, so chart patterns. So basically we can liken chart patterns as the reaction of price. Price can react in several ways, right? when when we first examine support and resistance, we examine that a support is a base that price will come to rest, right? So now what can we call this? A base. Because price is reacting at this point, and this point is holding price to go to the next direction. And we can also liken here that is holding price up as what? As the resistance. So this point now, we can call this zone. So we can call this one what? We can call this one resistance. And then call this one the support. Alright guys, so make sure you pay attention. So this is a support. Why is it a support? Because it is holding price to go to the next direction, and this is a resistance. Why? Because it is also obstructing price from going higher. So now chart patterns are patterns that tends to to form structures of support and resistance, right, in patterns. So there are patterns that the chart creates that also indicate kind of some kind of support and resistance, right? Yes. So now looking at this now, this is what we can call this a reversal pattern. Because let's say market was trending downwards, we expect a lower low, but then market reacted at this point, and then what, he held price up to this resistance, and at this point now you now wait. All right, so chart patterns in price action trading, we have different types of chart patterns. All right, so in this video we'll be examining each of these chart pattern and how can we use them for our trading success, right? So that is what you want to be concerned about. So first of all, you need to understand the concept of support and resistance. So anything that hold price, any price that is coming down, any region that hold the price to go up, that is a support. And if price is going up, any price that obstruct price from going higher, any zone, that is what, that is a resistance. So whichever way, our chart patterns will also be in the form of support and resistance. All right, so first of all, now we want to examine the first chart pattern. And it is very effective in the market, right? So the first chart pattern is what we call the double top and double bottom. Please guys, pay attention, the double top and double bottom. So now you can see this already. So this is an example. So this one now is what this one is. You can see this is what this is, one bottom, and then this is another bottom. So this is what this is, double bottom. So on the flip side, we get something like this, right? Okay, on the flip side, we get, I don't even know how to draw this now. Okay, this is the, okay guys, sorry, a second. So on the flip side, so this is double bottom, okay, double top, This is getting done. Okay, sorry. Okay, double top. Okay, double top be like this one. Yeah, all right, guys. So this is what now. This is double bottom and this is double top. I don't know if you're getting me now. Okay, so now let's examine it. Let's examine the anatomy. You know, is a moving uptrend. So now double top is a moving uptrend. So this we can liken this to an uptrend. Market forming higher highs and higher lows, right? So this first point now, this is this point. This is this point now. So let me shift this a little bit. So this is what now, this is head and shoulder pattern. So now, I say sorry, this is double top. So now we have first have a moving uptrend. This is uptrend. What is the characteristics of uptrend? Higher highs and higher lows. And then what, price then makes two same highs where you see something like this, and then price came here, it maybe coming back here, it was supposed to continue higher, right? And then it makes equal highs like this, right? So the top now you can see now that price first of all reject here, came down and he failed to break this, and maybe with some weak rejection at this point, and then he now failed to make that other high. So what will you call this now? You will call this a resistance. Remember, this is resistance, up is resistance, down is support. So this is now a resistance level. So now this is what now? This is a neckline, and this is what, this is a support level. So at any point you see double a double top like this, what is in your mind? You are trying to wait, okay, is this really a double top? Then if it's a double top, then what are you expecting? You're expecting that market to some extent, if you maybe you get your confirmation, you start heading to the next support, right? As simple as that, guys. So you want to sell from support, you want to sell from resistance and you buy from support. So that is the analogy. Buy low and sell high. You want to buy low, then you want to sell high. So a double top is a pattern, is a reversal pattern for sales, right? And you want to wait for confirmations, right? We are establishing the patterns now. We are not talking about the entry models. All right. So now you need to know that double top, when you see double top in the market, you need to learn how to spot double top. So this double top, first uptrend, and then market fails to break this and forms equal highs. So this is a resistance level, and then this is a support level. This is a good target, and this point again is another point, a point of partials. Yeah. All right. So, and in the flip side, this is a double bottom, this is a double top, this is a double bottom. Market came the first time, and the second time it failed to break this, right? So now this is what, now this is a double bottom, and then we expect that price will start heading to the upside, right? All right, so let's look at some of the examples of double top and double bottom in this chart. All right, so I can see a little bit. So now let's look at this. So this can form on several time frames. So look at this now. This is what we can also call this equal highs. This is the 1 day time frame, right? So if we check this on the 4 hour 1 day, so if we check this on the 4 hour 1 day, I think that would be very better. All right, so we can see this example now. We can also call this equal high. So what is it? This is a high. Market was retraced. Market was supposed to come and break this high now and give us a higher high. But what happened? You saw this reaction, and then what? Market start going down. Right. So this is one. This is a double top. So let's look for another example again. So looking at this as well. First, second. This is what? This is a resistance. It is resisting this price, and then we get this drop. Right. Yeah. And the same for this is also a double top. Now a double bottom, a double bottom will take price up. So let's look for an example of a double bottom. Double bottom. So I want this to be practical. That's why you see I don't mark any patterns. I just came and we are looking for it together, so you can see double top. So you can spot this, that this will always be a reversal pattern. Market will be going up first and then start going down, right? And then Okay, you can see that this market has been trending. So we are looking for double bottom now. So you can see now this almost look like, okay, okay, let's say this looks like a double bottom now. So now market came, you can even see that this one now, okay, you can see, you see market, let's just look at this side. See, market failed to break. Maybe you saw this, you saw the maybe kind of retracement, and market was supposed to break, but market failed to break. And then this one now, this forms a support. So you see, this is what, this is double bottom, and then it held price upward. So let's look for a hand. So this is sound double bottom. So you see this rejection, you see this rejection. So you can see that this is a good support zone. He held this price the first time it came up, it came with momentum again, but he still held it. So this is what, this is example of double bottom. So you see, double bottom will hold price up, and double top will hold price, or will obstruct price from going higher. All right, so now we'll be looking at, okay, let's just examine some of the entry models of a double top and a double bottom. So let's go back to our working model. So now in a double top or a double bottom, okay, let's use double top. They know on the flip side is a double bottom. So on the double top, like we know, is selling. So how do we identify selling opportunity now? First, we wait for the next. This is one of the entry model. I will give you just two. There are many, but I will give you just two. Yeah, maybe when you take our course, you get the full entry model. So there are many entry models. So first is what, wait for the neckline break. So now when you see a double top, when you see price rejecting here, you want to be very conservative. You want to wait for good confirmation, right? Maybe your confidence tell you to wait for good confirmation. So one of the confirmation you want to wait is what, is a breakout of the neckline. So this is what it means. Market successfully went up, and this held the market. So you want to wait. This is not this low now you are looking at, is this neckline of what, of the double top, not just a, because market can do like this. I say this is a kind of break of structure and then continue higher. Or then if you know how to catch precision trade at this point, it's still good. But then when you wait for this, it's a good confirmation, right? When you see this breakout, the baby can, when you see this neckline break, then you can use this for your entry model, right? Yes, you can use this for your entry model, whichever way, maybe a pullback and then to your target, or just a breakout and then you just take the trade, whichever way. So now first you wait for neckline break as one of the entries. So instead of this now, just have our entry model at around this point, and then maybe at any structure, or maybe at this high, depending on where you be targeting, right? Yeah, so you have all this entry model that has disadvantage and advantage, right? So like this one, I will give you precision of good high probability setup over time, and but this, the disadvantage is that to give you less risk to reward. This one will give you great risk to reward, and maybe, a few might be good profit, a few might be profitable, right? So number two of the entry model I will give you is double top or double bottom. When it forms at a key level, you will now wait for, you will now identify internally neck, okay, you now go into, okay, maybe let's say this formed on maybe the 1 day time frame. You will now use maybe 4 hour or 1 hour time frame. So let's just say 1 hour time frame, maybe for a kind of swing trade. So now when this form in the 1 day time frame, like you saw that one we saw there, you will now narrow it down to the lower time frame, and then what we do, you now look for structures confirmation. If when you now see a kind of break of structure, and maybe that is a good supply zone, you can now pick your trade. Maybe after this breakout now, after this neckline breakout now, you can now pick your trade at a good supply zone, and then instead of you using here as your SL, you can just have a little amount as your SL, but you do that on what, with good insight and with good technical approach. So you can see now we have two different strategy. This neckline you enter, or you narrow it down to the lower time frame. So let me just help you with another entry strategy. When market tap here as well, you can as well lower this down to the lower time frame, and you look for all confirmation entry in the lower time frame to catch this trade. First of all, this can be a target, you take partial, and then you ultimately take it down. So You can do that flip side of these entry models for this double bottom, and then you have the same trade opportunity, right? Yeah. So we're going over to the next chart pattern, which is the next chart pattern is what we call the triple top and bottom. Triple top and bottom. So let's have this again. Triple top and bottom. So now, what is the triple top and bottom pattern? This is where we have, this is how the anatomy looks like. This is one bottom, this is what two bottom, this is what three bottom. So now what can you see? You can see that Kai, the struggle is much. First, price came, it failed to break this level. Second, price came, it has not broken this level. And now third again, price is still coming to this point again. And then you still wait, you still see some kind of reaction. So this is what now, this is likely telling you that this zone is a major level that is holding this price, and price might likely reverse from this point. But you see, in every trade, for you to take good successful trade, you really need to have an entry model, right? You really need to have an entry model, because entry model will want to filter every trade setup that looks like normal but it's not normal. I'm telling you the truth. You can do some wonderful analysis, but then if you don't have entry model, you will just end up losing all the time. So now, the same entry model, this is a kind of, how do we call this now? Is it kind of M pattern or W pattern? Okay, so it's not that. So but now this is a triple bottom, and you see that it held price, right? So it held price. So we can characterize this by saying that it's a downtrend, or the same for a resistance level. We can say that it's an uptrend making either three highs, or making three highs in a row. And then for us to have some form of confirmation that okay, this will really hold, that this point here will really hold, then we can now add other conferences like what? Like neckline break, and other conferences like what? Like trend line, counter trend line break, right? You get the point. So now this is what now? This is your double bottom. So now these are the different entry models I just stated now. This is counter trend line. If this is broken and maybe a kind of good retest, you can take a trade here and you SL at this point. Then you ultimately drive it to this point, right? And this is a good precision trade. It's a good one. Yeah. More often of this trade will be successful. Yeah. So this is one of the entry model, and as well the other one is what? The other one is you go to the lower time frame at this point level, and then you wait for confirmations, right? You can also go to the lower time frame at this level and then you wait for confirmation, and then you ultimately take it up as well. So now this is double. Okay, this is a triple bottom, sorry. And as well, when we flip this to the other side, we get what? We get a triple top, right? We get a triple top. So can do that as well. So triple top. So but maybe this time triple top at this point, and then market now came up again and failed to break, and then now this is what triple bottom, right? So whichever way you know the entry model for this, you still apply this for this here as well. All right, so advancing forward, what is the net chart pattern that we need to consider as price action traders, right? Which other chart patterns do we need to consider? So which we'll go into, because we have the trend continuation pattern. All right, so let me help you with this. In the ICT section of the course, we spoke about three types of order flow, which we spoke of: the bearish order flow, the bullish order flow. So this is the bullish order flow, right? Bullish order flow uptrend. And then we have the bearish order flow, the inverse of this downtrend. And then we have what? The consolidating or ranging market. This is a kind of downtrend. So now in price action, it's still the same thing, but some form of how will I put it? Just a little bit different, right? So in price action trading now, we characterize this as what we call the trend continuation pattern. So instead of saying we have bullish market, bearish market, we rather say we this is a trend continuation, right? So what is a trend continuation? A trend continuation has runs and pullbacks. So what is this now? First now we see this. This is what we call run. And then what is this? This is what we call pullbacks. You can call this retracement. You can call this retest. You can call this correction, whichever way. There are much terms, So whichever one. So this is just know that for the purpose of this lecture now, this is pullback. So first we have runs, pullback. Then what is this again? Runs, pullback, right? What is this again? Run, pullback, run, pullback. Sometimes a run will be like this and then a pullback will be 50%. So whichever way where you see this, you just know that this is a trend continuation pattern. So if you want to take advantage of this trade opportunities in this, how do you position? You wait for pullback after a run. What do you do? You wait for pullback, and it is important for you to know if that is really a run or is a maybe it's a rate or sweep of liquidity, right? So if you want to characterize that way, you characterize that by market forming higher highs and higher lows. So anytime you form a higher high, pull back, and then maybe a higher high at this point, then you wait for what? Pull back. And there are many ways you can use it catching this trade. Like maybe number one, you can use your FIP tool to check your retracement, buy from good demand zones, Yeah. So now if you are waiting for market to come, you can now, at this point you wait for confirmation to take your trade up. So now you'll be buying your trade at this level, and maybe your SL will be at this other the low of the structure, and then maybe you can target the overall target. And if you are buying here, pull back. So this is what some people use for scaling, when they scale position. So this is target, right? So you enter again, buy at this pullback, and then TP at this point. So what is this now? You can see that you can use this to scale, as many position, as many as there are runs and pullback in the trend, right? So this is a continuation pattern. So now we have two continuation pattern. We have the bullish and the bearish continuation pattern. So in this kind of market, we can say the buyers are in control of this market, while in the market that is tumbling, what do we say? We say the sellers are in control of the market. So now what do we characterize this majorly? Has higher highs and higher lows. That is the same thing as bullish order flow. It's the same thing as runs and pullback, higher highs and higher lows. So if you flip this now, flip this, this is a descending. Okay, let me not say descending channel now. So now you flip this now, what do you have? You have runs, pullback, runs, pullback, runs, pullback. But now this is a bearish what? It's a bearish continuation pattern. So whichever way, you need to know that this is also a good chart pattern. Maybe majorly this is what people used to trade daily. Yeah, this is what people used to trade daily. So you need to know about runs and pullbacks. All right, so okay, so I forgot to just state something. Alright, so in this runs and pullback, in this trend continuation, anytime you see an obstruction, and it is very important for you to know a high and a low. So now looking at this, what? This is a high that was broken. So you need to be specific. If it's this trend, you need to know that okay, first now this bought and this sold. So you know that in the lower time frame as this was selling, it has changed structure. This bought again. As this sold in the lower time frame, it has changed structure. So you need to wait and see when the lower time frame has also changed structure to join the higher time frame to go bullish, and then you buy. You get the point? So you don't want to just maybe this market is this market has not changed structure to join the higher time frame, and then you are trying to buy, or maybe you sell the market and you are trying to catch to this point. You don't know what you are doing because you are going against the trend, right? So again, when you see something like this, this is what we call a reversal trend change. When the trend change like this, what do? You wait for patterns like head and shoulder, and then you intend taking it down, right? But market will not just do. You see how this thing just a good sweet like this, it will not do this all the time. It will even be very complicated, I'm telling you the truth. So just for you to backtest this and see how it works, right? Yes, so in bullish market, higher highs, higher lows; in bearish market, lower highs, lower lows. And this is what we call what? A trend change. So now in ICT we say this market structure shift or change of character. But now this we are talking about trend continuation pattern. This is what we call trend change, right? This is trend change. So this bearish now can turn to bullish. We call it trend change when it breaks this high instead of going down, and this now can turn to bullish. Okay, can turn to bearish when it breaks this low, right? So whichever be the case. All right, so advancing, we are going into more, more advanced patterns, more advanced chart pattern. And now we'll be looking at the head and shoulder pattern. If you're a trader, you must have heard about head and shoulder. If you have not heard about head and shoulder, then you have not been in the game for some time. So I can spot out some head and shoulder here now. So a head and shoulder pattern start with a head and shoulder start with, okay, we have head and shoulder and inverse head and shoulder. So now it's head and shoulder I'm talking about. So it starts with a moving uptrend. So the moving uptrend is what? Is the left shoulder. So this is what moving uptrend, going up, going up. So let me just go up to this one. So this is what now, this is the left shoulder. It starts with a moving uptrend, and this is the left shoulder. Then head swing high. Pay attention. Swing high is what? Swing high is up. Head now is swing high up, and what? Right shoulder. So if you say swing high is like this. So there's this swing high, call it swing high. Now it's a swing high, and then what? Left shoulder. So left shoulder. So this is head shoulder. So now this is what now? This is what we call head and shoulder pattern. So what is the projection? When you see this, you expect the market to come down. As simple as this. So this is what head and shoulder. So now we have also inverse head and shoulder. So in inverse head and shoulder, what do you think will happen? That means the market will start from an origin, to start from here, and then it will form what? Left shoulder, and then to now form head, right? Most points to be like this, and then now form right shoulder, and then the market is heading back. All right, so this is what head and shoulder. This is what inverse head and shoulder. And please mind you, see all of these things I'm just drawing perfectly. They might not happen perfectly in the market, so you just need to know, like you just need to backtest. Let me just put it that way to have it right. So now is head and shoulder start with an uptrend, and then a left shoulder, then a swing high, and then what again, which is the head, and then a swing low, and then a left shoulder, and then you know that somehow market is coming to the next, after breaking the neckline, you know that market is coming to the next support. So now look at this. What can you call this? You can call this a resistance point, and also you can call this what again? Resistance. So now look at this. A head and shoulder has two resistance points in view. So now this is what? Head. First resist. Okay, this is first resistance. And now we can call this, so most times when we hear of stop loss hunt, liquidity rate, liquidity sweep, this might be liquidity sweep. So head, liquidity sweep, and then what? Respecting this other resistance level, right? This price action, support and resistance, respecting this resistance level. And what do we get? A reaction down to the next support. So now, what are the entry models for this? First, like I will always say, you wait for what? Neckline break. This is a good confirmation. So when you wait for neckline break, what can you do? You enter the trade, and then you target this low. So now you put your SL at this high, right? Yes, you put your SL at this high, and then you target this low. So it is very important for you to know that, is this trend a bullish trend, is it a bearish trend in the overall time frame. Then you need to know the time frame you are seeing that head and shoulder pattern. Then you know how to flow with the market, right? So looking at this now, okay, this looks like a head and shoulder. I don't know, are you getting me? So start with what? A bullish move up, and then what is this now? Left shoulder, and then what? A head. This what? Head, and then what? See, come down, and then what is this? A right shoulder. And then what do you expect? The market to come down, but it is very important for you to know the next point the market is coming down to. Now you can say that okay, market is coming down. If you put this point, you might be wrong because what this trend is overall bullish. So all of those you need to sort out that. So maybe you need to mark the next point of support. Maybe you can mark this point like this. Then it makes sense to some extent that okay, market like this will be heading down for this point instead of just putting unrealistic, no, it doesn't make sense. All right, so this is head and shoulder pattern. You have entry model neckline break. All right, so let's look if this neckline break is okay. So now what is the neckline here? This is the neckline. So head, okay, shoulder. So now you can see that these are the neckline. You see, this is the neckline. So we can mark this like this. We can mark this. This is a bullish, or this is a bearish break. So after this break, what you get? A retest. So at this point now, because of this, you can say okay, market is ready to sell, but this market is selling. Remember, this is overall this is bullish market, so you need to know what you are doing. So if you are selling this market, maybe you are selling it to this point. So this might be just one of your trade, right? 2 weeks to reward. So after this breaker, you took your trade, and then what are you targeting? This point because of what? Because maybe this is support for this price, right? Or maybe you can ultimately target, as the case may be. I'll just put it here for the purpose of this now. So now you can see that we have just gotten an entry model. Or you can go to the lower time frame and see what price is doing. But being in the higher time frame will give you most precision trade. Or then you can do this what we call counter trend, and then this one, but you get this one on before. So now this is a breakout, maybe you get a retest. So this might be another entry model. So you see, this might be another entry model, and so you can get this straight, right? So now we have just used this head and shoulder pattern, and I've just explained two good entry model you can use. So whichever, go and back test. So for the flip side, this head and shoulder pattern. Now for the flip side, inverse head and shoulder. This one na inverse head. Okay, you can see some inverse head and shoulder here. So now you're looking at this now. This is what? Low. This is what? Head. Okay, so yeah, this is head. This is inverse shoulder. Head, inverse shoulder. You can see this now. Head, inverse shoulder. I can also see something here like this. So you see this. This is what? This is shoulder, shoulder, and this is head. Or it failed to take price up, but see this one now. This one held price up. So now this is it. You need to know what you are doing. That's why I say go and back test, because at some point you see this is just clean. Maybe some point you might just see price like this, you know. So it is just good for you to know. That's why I say you need to have entry model. So it's your entry model that will tell you that okay, it's this point that market want to drop, then you catch your trade from here. Instead of here, because most time it will not just be clean like this. And most time it likes, okay, it can be like this, yes. Most time it can just be like this, slanting a little bit. And most time this can be slanting as well, a little bit. Okay, so example of this, there is this GPPNZE. Hi, GPPNZE. Use capital. So now you can look at this now. So maybe 4 hours. There was this head and shoulder form. Okay, so now this is what this is. Inverse head and shoulder. This is a head, and then this is a shoulder. So now if you look at this now, this what we call this a resistance, and this one was just clean. See, resistance held this price, and held this price, but this one now was a kind of liquidity rate. So now if you want to take this trade now, what will you do? This is what neckline break. You have taken your trade here. At this point, your buy trade, you will test, and your SL at this low of this, at the shoulder or not the neck. If you put at the neck, that means you are trader that don't want to get any kind of SL. And maybe you just target somewhere close. Let's just say we just target 1:2 for the purpose of this. So now you see head and shoulder, it has held price up, but then you need to know the overall trend, know where you are targeting, know where the next resistance or support level is. And then you know what you are doing, so that you can see even in the higher time frame that this is even a kind of head and shoulder pattern. You see, this was inverse head and shoulder for us to buy this market, but now in the higher time frame, this is what? Head and shoulder blunt. You can see now, we just talk about this. Head and shoulder, head and shoulder, head and shoulder. What are we expecting now? That to some extent This market, if it breaks this neckline, it might drop to some extent. But then you need to know that if this is this a bullish market? Is it really changing trend? Is a changing trend? I mean, the higher time frame will confirm this structure well. Stuffs like that, and then you are good. You are good. Yeah. Okay, so we are done with head and shoulder and inverse head and shoulder, and also the entry model we can use. So now we'll go over to the next chart pattern. So which is the next chart pattern? The next chart pattern is what we call, okay, so there are other entry models on head and shoulder pattern, like sweet entry models, but for the purpose of this, we will not discuss this yet. So now we'll go over to triangles, channels, and wedges. Are you sure? Okay, yeah. So let's go over to triangles, channels, and wedges. So now we are into triangles, channels, and wedges. So you know what a wedge is, what a triangle is. So you know how to define other kind of support and resistance in the market. So when you see a market doing, you see, the purpose of this is just knowledge. But the truth is that it will just help you to be better. But the truth is that after all of this, you need to backtest, have a plan, right? Backtest and have a plan, because that will help you a lot more. Because sometimes too much knowledge is toxic. That is the truth. Then having a plan can help you filter some things that are not relevant, or help you do carry everything in a good, correct approach. All right, so triangles, channels, and wedges. So first of all, let's look at triangles. So what is a triangle pattern? A triangle pattern, as triangle is. So under triangle pattern, first we'll look at triangle. So a triangle pattern is a pattern. Okay, triangle pattern, first of all, they are categorized under three types of triangle pattern. So first we have the ascending triangle, that is a bullish market, and then we have the descending triangle, and then the last one is symmetrical triangle. So first let's examine the ascending triangle. So first we have our resistance level, and then what do we have again? We have, okay, let's say this is our support. So this is first. Just follow this now. Let me delete this. Let me make this a little bit interesting. Slant. So you can see this is a triangle pattern. So don't mind how it is. You know, just get the understanding. That's what is important. So this is what a triangle pattern. So what are the characteristics of this pattern? It makes equal highs, that is same highs in a horizontal resistance base. Same highs. This is a resistance. It makes almost equal same highs. But then what it bottom, this is higher highs, this is higher highs. Sorry, let's say this is higher lows, but then this is equal highs. So we say equal, higher lows and equal highs. This is a triangle pattern. Higher lows and equal highs. So the bottom make what? Higher lows, ascending. So you can see that we can mark this with a trend line. That means it allows ascending trend line. You see this trend line is ascending, but then the resistance is very strong. It has equal highs. So most times this might be weak. It might just be weakening this level, but then it is just like this. So this is what now? This is an ascending triangle. So if you spot this kind of triangle, what do you want to do? You want to buy from here, sell from here, buy from here, sell from here, buy from here. Most time I see it like this. You just need to wait for breakout. There's what we call the X to E wave. X to E wave, X, A, B, C, D, E. So we are not talking about X to E wave now. So this is what this ascending triangle. And on the flip side, we have this support as what? Equal equal lows, equal base, and then what, descending. So now we can do something like this way. So this is equal, then this is slanting. So now see, what can we do? We can now draw a descending trend line, right? So now we can now say, okay, this trend line is indicating that this is the resistance. So what can you do? You can buy from support and you sell from resistance, buy from support. Okay, buy from support, sell from resistance, as the case may be, until this channel is being exhausted, right? Very important. So the last one is what? Is a symmetrical triangle. So this is a symmetrical triangle. You know what is symmetrical triangle is? So this is it. This is the kind of pattern. You have this, you have this, you have this, you have this, you have this. Okay, so let me make this. All right, so just stay with me now. So what can you see? You can see that this one is symmetrical. So what can you see? You can see that this one is in a particular range. See, it's just getting tinier, tinier, tinier. So maybe from here now, you still get some reaction in this. So now what do? You wait for breakout retest to continue the trend, or breakout below to continue the trend down, as the case may be. So now this is symmetrical triangle pattern, right? So take note of this. So we have just examined three types of triangle pattern. This is what ascending triangle. Just know that higher highs, but then this is equal. This is what lower lows, but then the okay, lower highs, but then the lows are equal. And then symmetrical. So in symmetrical, what this is, it um it makes lower highs, that is descending trend line, placed above this one, lower highs, descending trend line placed above, and then what, higher lows, ascending trend line, place what, below. So take note of this. So in this kind of market, you just want to wait. The best entry model is to wait for breakout. Yeah, except you want to catch. This is what ICT call, most times we call the ranging market, the consolidating market, but most times you need to know that this is a triangle pattern. If you catch it in the higher time frame, right, you can make a whole lot of money, because maybe this kind of one like this, like, yeah, this much pace. If you're taking a sell trade from here after this breakout, you'll be catching a whole lot of pips, right? A whole lot of percentage. So you just need to know how to position to catch all of this. And then the last but not the least, this one you often see it. You often see it in, you often see it. You often see it where now. You often see it when you see people use trend line in doing the analysis. You often see it. And what do we call this one? We call it a channel pattern. We call it channel pattern. So stay with me. Now triangle pattern. Now this is what channel pattern. So what is channel pattern? How about that? Take it out of this nice screenshot. Okay, so channel pattern, we have different types of channel pattern. We just have three different types of channel pattern as well. We have the ascending channel pattern, the descending channel pattern, and then the horizontal channel pattern. So now let me go ahead to mark this. So this is channel. Then I can delete this and just come in. Okay, you see? Yeah, so this is channel pattern. This is what ascending channel pattern. So I just want you to be aware of all of this, right? So then back test, you see most of this. So you see that this market is just respecting this channel, right? So now this is what this resistance, not even up now, but now this is resistance and this is what support. So it is good for you to do your analysis. Sometimes you might have a channel pattern in the higher time frame as a support, and then you now have a maybe a triangle pattern in the lower time frame as a resistance. So what do? You wait for market to reach at those confluence zone, and then you now wait for good confirmation. It will give you sweet trade, like sweet trade. So this is what this ascending channel pattern, and then descending channel pattern. Already you know the trade opportunities that are available in these patterns, right? So now this is descending channel pattern. You just know that descending channel pattern is where market has been descending. So you see this one now, it's descending channel pattern. So this is the resistance for this trade, and then this is the support for this trade. So you see this market is dumping and this market is appreciating. So bullish, bearish. This is what ascending channel pattern. This is descending channel pattern. And then the last one, the last but not the least, we have the horizontal channel pattern. So you see this now? Yeah, something like this. This is what we call the ranging market. This is the best definition of a ranging market. So this is what now? This is a horizontal channel pattern. So when you see this kind of channel pattern, you know that okay, opportunities will always come here, because you are buying from the support and you are selling from the resistance. You buy low, you sell high. So when you wait for confirmation, you buy, you close your profit here. You have a confirmation, you sell, you close your profit. As the case may be. But then the truth is that staying put on a consolidating market or a ranging market will help you much, because you want to catch good moves, like trending moves, to make money with the appreciation of pip, right? Or with the appreciation of that asset value in pips, right? Yeah. So this is for channel pattern. So entry model, of the entry model. So you can go and back test, right? You can back test. Let me just add the last one. The last one is what we call the wedge pattern. So the wedge pattern. So what is the wedge pattern? What is the wedge pattern? What is the wedge pattern? Under the wedge pattern, there are of three kinds again. We have the rising wedge, the falling wedge, and then you know we yes we just have the rising and the falling wedge. Sorry. All right. So rising wedge. So the rising wedge is just it's just a channel, open channel that becomes tight. Okay. So this is what we call the wedge pattern. So I'm equipping you with knowledge now, information. So do well to study, do well to study, do well to study. So you can see all of this. So these are the different chart pattern. This is what we call the wedge pattern. So now when you see a price, so remember this wanted to look like triangle pattern, but please pay attention. So in the triangle pattern, we have equal highs or equal lows depending on descending or ascending. But now see, this is in a wedge form. Price is moving in a wedge form, right? So when we have this again, so you can see now this is what this one is what this one was. You can see that. Okay, what did I even do? So we are the what did I even do here now? So I'm not understanding. Okay, so sorry, this was like this. It was supposed to, this is ascending, but I hope we got it. This is ascending, so this is like this instead. So this is ascending, right? Yeah, this is ascending. So now this is what ascending or rising wedge. This wedge is rising, it's rising, 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 rising. So I say triangle, it was equal highs, but now ascending, it is rising. See, rising wedge. So it's higher highs and higher lows. Makes sense, right? Makes sense, guys. So here, for descending, so instead of this now, this will be like this. Sorry, guys. So much was going out. So you guys know what I mean. So much of knowledge update was just going out. So now this was descending wedge. Okay, let me just put this. So in this descending wedge pattern, you can see how it is. You can see, so this is rising and descending wedge, right? So we just have two of them, rising and descending wedge. So in a rising wedge, you're looking for pullbacks to buy. In a descending wedge, you're looking for pullbacks to sell. As simple as that. You don't want to buy, you don't want to just buy at the support, no, but you're waiting for pullbacks. Please take note, you're waiting for pullbacks. So in this one, you're just trying to catch sells, and in this one, you're just trying to catch buys. So this is where we come to the end of this lecture, guys. So this is on chart pattern. So please, all what you have learned here. See, it is very important that you know that you take note that market will not just, you see all this pattern, they will not just play, very smoothly and just accurately, right? No, but then you need to do back testing. There are many entry models for this. There are many entry models, many variation of entry models, whichever way. But then when you don't backtest, you will not have confidence in executing. So the last step is backtest, backtest, and backtest. So guys, thank you very much. I hope you found value from this. Do well, do well, like I said, do well to backtest. Yeah, do well to backtest. So once again, I'm Gosha FX. If you really want good coaching and mentoring, you can check me out in the link in the description, and to direct you to a WhatsApp account, and they'll be right there to meet with you, to my team, and you can ask a question, and have a booked fully mentorship session with us, a strategy session as well. All right, guys. So thank you very much. If you found value in this, disturb the subscribe button, scatter the like button, and then also give your thoughts in the comment section below. Thank you very much.